Matt Santacapita from the Santa Sells Houses team, and this is another episode of our Money Market Update. And woohoo! Episode 200! Which we were talking, it's kind of funny, so eat crow those people who said this was gonna last a month, because we're 200 episodes deep, and we're not stopping, so we'll see you for episode 500. So let's jump into it. We're still in the early stage of the year. Obviously, it's second week of January. Let's get into the numbers quickly, and then I just want to talk about a couple things. So new listings were at 29, solds at 33, which is actually down from last week, which was 45, and conditionals, we have 3, which is down from 10. I thought we'd see more activity. Not a crazy amount, but I thought we would see more. Now, however, let's just say with what's going on with COVID numbers increasing, Quebec, they just went to curfews and things like that, that I think it's pretty fair to say that this is pulling some people back. However, the real issue that we're running into is there's no inventory. So before we did this video, we pulled up some numbers to give people an idea as of right now, as of when I pulled these numbers. In the City of London, we had 210 new listings. We should have 1,000. So we're in what would you call a listing deficit. We need more listings. However, the problem that lies over here is those listings are not going to come to market until a lot of these sellers can find a house to buy. Because most people aren't going to sell their home, give themselves a 60-day close, and have no idea where they're going. So the market's creating what we're going to call a pickle for 2021, because we need supply, because demand has never been stronger. And to look at some of these numbers a little bit more, out of those 210, we had 60 that were classified as condos and townhouses. A weird number that we found in those numbers, 27 were new builds, which I'm gonna just flat out say that's wrong. And the reason I say that is I then checked in and looked at the resale numbers, and the first 2 that were on my list were actually new construction. So I guess from our standpoint, from realtors, guys, like, come on, let's polish our pencils here so we can really see what we're getting ourselves into on these numbers. We need to be able to sort this data for our clients. And where's this gonna go? Well, part of the pickle that we're in has to do with mortgage rates. Mortgage rates, roughly call it for a 5-year insured fixed rate mortgage, they're 40% lower right now than they were 12 months ago. Which, to try and kind of put that, I guess we can throw some numbers at that. You're looking at roughly call it around 3%. We're now at 1.74%, which maybe doesn't mean a whole lot when we just look at small numbers like that. But if you really did think of it in terms like this, what if you had a 40% pay raise or a 40% decrease in pay? That's huge. If you can for a minute think about it in those terms, we can kind of understand how much of an effect that does have on the market. After all, if you look and you say, right now the median price of a home in London is $515,000, which is actually up from $405 at 12 months ago. That mortgage payment with these new 5-year fixed rate mortgages is a little over $2,000 a month. If we had mortgage rates that were the same as they were 12 months ago, let's say 3.09, you'd be at almost $2,400 for that same payment. So these are significant swings that we've seen in a relatively short period of time. So, where do we go from here? I think 2021 is actually going to be a more difficult year for real estate, and not just from a buyer, but also from a seller, and quite frankly, also from the realtor standpoint. We are going to have to educate the consumer a lot more over the coming months, and especially with COVID and the lockdowns and everything that's going on, there's extra precautions that we have to take. So naturally, we are going to be navigating some waters that maybe for right now they seem familiar because what we went through for the past 9 months. However, I'm going to argue and I'm going to say it's going to be different. it could actually get more intense. And so what I mean by that is technically mortgage rates could go lower. It sounds crazy to say that, but a fixed rate mortgage could go lower. We'll maybe dig into that on another video because it's a little bit more of an explanation, but you know, you can imagine if a 5-year fixed rate right now is 1.7 and it went to 1.5 or 1.2, again, it's that much more of a frenzy because people can afford a little bit more and a little bit more and a little bit more. So again, it's Matt Santagappa from the Santa Sells Houses team. It's been a longer episode of the Monday Market Update, and tune in next week. We're going to take a deep dive into what we've seen in the housing market over the past 12 months. We're going to dissect what's gone on with single-family homes, condos, townhouses, inventory levels in these different categories, prices in these different categories, and then again talk about what we think we're going to see in these categories over the next 12 months. So again, thank you very much for tuning in. Happy 2021. Tune in next week because it's going to be tons of info. Cheers.